Hello, everybody. This is David Campbell from hassle-free-cashflow-investing.com, and I am joined today by owners of one of the largest property management companies in the Dallas-Fort Worth Metro, Leah Slaughter. And Leah and I are going to share with you some best practices about property management, residential property management, as well as selecting a property management company when you're looking at entering into a new market. So, hello, Leah. Thanks for joining us.
Hi, absolutely. Thanks for having me.
Awesome. So, Leah, tell me a little bit about your company and how you entered the property management space in Dallas and some of your plans for expanding throughout Texas.
Absolutely. So we're in our 12th year of business, and we started in really kind of the central part of Dallas-Fort Worth Metroplex working with investors. And as we saw the market getting so strong, we had a strong feeling it was going to collapse. And so we started positioning our investors looking in certain areas, especially near highway growth, and went outside kind of that normal city center to make sure that if and when the market fell, that they would be positioned in a place where they were already in high growth areas so it wouldn't be so heavily affected. So one of the big areas we started selling was off the George Bush Turnpike in Rowlett before that highway actually opened, and we just kind of have continued that expansion, and now we go all the way through North Texas, we go out to Tyler, we go north all the way to the Oklahoma border, we go west all the way to Granbury, and south now through Waco. So we have continued to expand over the course of more than the last decade. And we are now expanding into Houston and Galveston, and that will be our newest territory. We will be beginning next week. So we've been very successful here in Dallas. We've got a great team. I have 29 people in my team here just in Dallas.
Wow.
And we are certainly looking forward to continuing to expand to eventually service all of Texas.
Awesome. And Leah has got just a fantastic positive reputation in the Dallas Metro. Several people that I know and like and trust just say absolutely fantastic things about working with Leah's company. Very familiar with their brand. Their signs are all throughout the Dallas Metro, and very excited about working with Leah in helping our investor clients at Hassle-Free Cashflow Investing acquire residential properties in the Houston market. And as our clients know, property management is the number one most important make or break or success factor in your success as a residential property owner. And so when I'm entering into a new market like Houston, one of my very first things is to make sure that I've got a property management partner that I like and that I trust and that has the the experience to really set me up for success. And so, Leah, we were talking the other day about some of the things that set your company apart and make your company unique in the way that you manage properties. And I was very impressed. Could you share some of those unique things about your company?
Absolutely. So one of the biggest pitfalls that I see when taking over properties, because a lot of what I do is fixing where other companies have perhaps not done their best work. And one of the biggest problems I see is property managers really don't check on their houses.
Yeah.
They might see it move in and move out, but the problem is that so many things can happen during a tenancy. It can be something as major as a tenant putting a liability item like an above ground pool or a trampoline that could void your insurance, to something as small as a small roof leak that the tenant doesn't notice that's doing damage or could cause mold problems and all sorts of things. So one of the things that we started day one is doing quarterly visits. And of course, we include these at no charge to our customers. We are a flat rate company. So what that means is that you're going to pay one monthly fee as a percentage of the rents collected, and that's going to include just about everything we do. So we don't charge for repairs for handling them. You just pay all these different things. But these walkthroughs are so important. So every quarter we're going to go inside and outside and fully document the condition of the property. We're going to fix anything that's urgent that the tenant has caused. So a good example, we're in Texas. Of course, we run our HVAC like crazy. It's hot. And if you're running with a dirty filter, it can do really significant damage to the HVAC system. So our leases require the tenants change their filters every single month. But a lot of tenants don't do that. And so we offer two different options for tenants. Number one, they can opt into one-time filter changes, where when we're out there, we will change the filter while we're there. Or they can opt into recurring changes, where we'll come out there every month, every quarter, whatever they want to take care of those filters. But if the tenant opts into none of that, and we go to that visit and we find that filter clogged or dirty or obvious that it's more than a month old, we are going to change it and that tenant's going to pay that bill. We do not allow those filters to sit dirty to damage the HVAC system. A dirty filter in a period of just a few months can do significant damage to the coil of a system and require $500 to $800 to fully clean a coil. So just simple things like that. We also check the smoke detectors every visit to make sure they're functioning properly. We test them, and if the battery's bad, we change them. It's little things like that, but you're going to get a copy of the report every quarter with the full documented photos of everything we found and the notes of what we found. We're going to tell you what we recommend to do. We're going to tell you what we've cited the tenant for, and then we're going to continue to follow up to make sure they take care of any of these citations. So that's one of the many things that sets us apart, because I've seen where this can go terribly wrong. I've taken over houses before where we find them vacant. I found it where we've had a halfway house going on. There's all sorts of things you can find. And so being there every quarter is really important. And I have some tenants that see me every month. If we have a concerning tenant that we need to follow up on to make sure they don't need to be evicted because they're non-conforming, then we'll go every week, we'll go every month, whatever we need to do. And again, that's at no charge to our clients. So that's a big pitfall we see.
It really is. That's an amazing uniqueness about your company. Most property managers that you say see the property, move in and move out, and that's it. And if you get a tenant in there for years and years, there could be major problems going on. And most property managers aren't willing to do that extra work because it's overhead, it's cost, right? And they don't want to.
Lots of employees, there's lots of things that go into play with that, but I don't know how you could possibly have a successful rental without doing it, because assume that you're making $500 a month on a property and you have a tenant that's destroying a house. They can very easily cause $4,000 or $5,000 of damage in just a few months.
Yeah.
It's going to eat into that profit really quickly, and so we want to try to deal with problem tenants as quickly as we can. And the other thing is, when they know you're going to be visiting, they're a lot less likely to rent from you if they don't agree with that. And so these tenants, they know going in that we do these visits, we word it very carefully, that they understand it's for their benefit too. And our tenants know it, and we tend to find better tenants because of it. So it's a great thing all around.
Yeah, and when you're in a very strong market like Dallas and Houston, there's an abundance of tenants available. So being picky and choosy doesn't necessarily increase your vacancy like it might in a really weak market. So some of your management techniques, I think, are very awesome best practices, and they're also work because of the strong markets that you're in.
Yes, and so one of the things that we do, kind of talking about vacancies, is every lease that we do a 2-month re-renting period. So when a tenant's lease is up for renewal, we're going to open 3 to 4 months before that, and we're going to let them know what the market's currently doing and where the rates currently are and what our recommendation is. So one of the things that we're constantly doing is monitoring the market to see when it's time to sell, when it's time to reinvest, all these different things. So you're going to get notice from us, and we're going to let you know, hey, it's time to consider selling, or no, let's hold a little bit longer. We'd like to renew this tenant, and we're going to take care of that. We're going to give them that notice to let them know what the new rent's going to be, and we typically raise every single renewal, and we typically don't let tenants go month to month. We do include a month-to-month amount in that renewal that's $200 higher than the current rent amount being offered, so that they understand that if they don't sign, their rent's going to go way up. But the beauty of it is we write 60 days in there. So if we're almost to 60 days out and the tenant has not either renewed or given notice, that we can do that, and we'll have 2 full months to market the property. So because we have 2 months to market and show the property with the lockbox and having agents go in, very, very rarely is a property not rented before that tenant moves out.
Yeah.
It allows us to get much better tenants because we can be very selective, very picky. And because we've been checking on the properties, they rent very easy because they're in generally good condition. So all of those things we do let us keep our vacancy rate very low.
That's awesome. And those best practices could seem slightly annoying to a tenant, but they are fantastically important for the success of the landlord. And it's a really fine line when you're talking to a property manager whose best interest they're looking out for. Are they, favoring the tenant? Are they favoring the landlord? Or are they really trying to create a win-win situation? And the more we talk about your management philosophy and style, the more I can really see that you're trying to create a win-win for tenant and landlord, and have very good policies that protect the property and protect the landlord's interest. Yeah, I also have really enjoyed seeing some of your property management reports from some of my clients that already work with your company. And what I've noticed is you communicate very thoroughly in pictures and in text and financial reports. And that, I think, is a key to a hassle-free investing experience. Because one of my philosophies is that when your reality doesn't meet your expectation, that's when hassle comes or when stress comes. And so you can't protect an investor from every situation that could go wrong in rental property. But your company, in my experience, is doing a very good job of communicating what's happening on the ground and is available. And when you're creating expectation, even when that expectation is not a good one, right? That you're saying, hey, this is what's going on. It's unfortunate, but this is what's going on. And here's pictures, etc. I think that's the best that an investor can hope for in a property management company. And what I've seen is a lot of companies, they just bury their head in the sand, and then when they send a letter that says, here, send me money, and the investor says, what? What do you mean send me money? I didn't even know there was a problem. Send you money for what? And so I really enjoy the thoroughness of the reports that I've seen. And I was really expecting, because of the high level of service that your company provides, that your fees would be among the highest, and they're not. They're actually among the lowest in the metro. How do you do it? How do you provide such good service and at such a low price?
Well, number one is volume, of course. You have so many clients and so many people we're working with that we're able to do things a lot cheaper because, of course, the more you have, the more you can spread. And we kind of sect our city into territories, and we do different territories different days of the week. And so it's allowed us with this development that I've created to really keep our costs as low as possible. We also have staff that is very efficient. And instead of having one property manager for each owner, everyone has their set things that they handle in our office. So we have two people that do nothing but handle repair requests. And I do want to mention when repair requests come in, we're going to always notify you so you're well aware of what's going on, and we guide you and do all those things like you were talking about. A lot of people just have no clue what's going on and where the money's going, and so we want to make sure before we ever even spend a penny, you know what's going on. So you're going to be contacted with that. But two people who handle nothing but repairs. We've got one person who handles nothing but applications. We've got two people who handle nothing but walkthroughs. So we've just got different teams that do different things so we can sect it by city, and it allows us to be very efficient. The other thing is my profit margin's lower. I don't make as much per client. I'm not in this to get rich on every client. I'm in this to make money across the entirety of my company. And so it allows me to, yes, operate with a little bit higher margins, and it allows me to give the level of service that I want. I made a decision when we started the company almost 12 years ago that we were going to make sure that we did it the way I would handle my personal homes. And I manage my own portfolio here too. And I do everything the same for my clients that I do for myself. There is not one thing that I'm preaching that I don't do myself. And I think that's very important. We are large enough. We are a large office, but we are family owned and operated. Every owner has my cell phone number. Every owner knows who I am. Every owner is involved. And it's just a different way of doing business. I see so many times how these property management companies get large. They get like we are, and then they sell out. Some of my largest competitors that are a little bit smaller than me, they've all gone IPO, and we're taking over their clients like crazy because it's a completely different level of service. And no, they don't offer what I offer either. And yes, they charge more than I do, but they also, that kind of family value is gone, and we are all very much like family here. And so we treat our customers like family. And I think that so many businesses have moved away from that. We're in a world now where everything is fast-paced and it's online, and the day of the generational businesses is gone. And I am here to be the exception, and I will remain the exception. And so everything we do with our business, we just ingrain that into every piece of it. And it has worked well for us, and I've been infinitely blessed with my clients. I have great customers. We've got great tenants. And it just allows us all to have a much more stress-free time owning property. And at the end of the day, an investment is only as good as the amount of time and money you have to put into it. And if clients are stressing and they're not confident in their investment, it's not a good investment. And so our number one goal at the end of the day is we want our clients to be educated, and we want them to feel like they have their hand held so that they can make good decisions with guidance. And that's something that we strive to do with all of our clients.
Yeah, that's a fine balance between the economy of scale that allows you to deliver very specialized and thorough service without, charging an extreme amount for that service. I used to own a property management company myself, and I realized that you have to be very large, or you're just spend your whole time as a property manager doing everything, right? And so, what's nice is you shared with me that your company manages over 1,000 doors, and that's
We're approaching 1,000.
approaching 1,000 doors, which is fantastic. And I know that when you're managing property, a certain percentage of your properties you do very little work on, and the tenants do take care of the property immaculately. They pay their rent on time, and you think, wow, I'm making a ton of money on these properties because there's hardly any work. And then there's that certain number of properties where the tenants are always late, the houses are always breaking, and you're saying, I'm making less than minimum wage on this particular house. Like, what's going on, right? But when you have that portfolio mindset and you say, hey, I'm going to deliver exceptional service to my portfolio and to my investors, then it is a little bit of a homogenized, like the winners become winners and the losers get still great service because you've got that economy of scale.
We call it the 10% rule, and what we find is that 10% of the properties take 90% of the time and resources. What I can tell you is that as long as an owner is working with us and willing to help us get the property to a point where it needs to be, and it's typically in accounts we take over. It's typically, when we're being hired when another management company or an owner's been self-managing and things need to be fixed. I don't ever give up on a property, ever. It does not matter how much work it needs. I've taken over people in bankruptcy with $15,000 in foundation work and plumbing leaks and mold issues. And I just want to be upfront. I don't charge to take on those problem clients. We don't charge upfront fees. We don't charge takeover fees. We don't charge any of that. It does not matter what situation you're in. I don't give up on properties as long as the owners are communicating and as long as the owners are willing to do what's necessary and, of course, within reason, then we're going to get it taken care of and we will get it fixed. And what I can tell you is those 10%, while they take so much time, they become the most rewarding and the most loyal clients. And so we are more than happy to take that on. And the majority of those remain with me personally. And so I remain very involved in those difficult situations so I can make sure it comes through exactly the way that I have envisioned it.
Nice, nice. And for clients who've been with me for a long time know what I don't want a client to do is go buy something and then say, hey, Leah, what do you think of this thing that I just bought? Because it's too late, right? It's like saying, what do you think of my new wife? Well, like, it's done, right? You already married her. It doesn't matter what I think. It's done, right? But if you're saying, hey, Leah, I'm considering buying this thing, what do you think about this? And here's the magic, the $1 million soundbite. Would you like to have this in your portfolio? What kinds of properties do you want to manage? Because if I can get a property manager to say, this is what I want to manage because it's in the 90%, which is the hassle-free 90%, then the property manager is successful, but also the owner is successful, and everybody wins, right? So don't go buy that 10% and call a property manager and say, work miracles, right? Simplify life. Just say what would fall in the 90% category, right? Get your property manager first. So we are expanding into the hassle-free cash flow investing is expanding into the Houston market. And one of my philosophies is you find a market that's weak and becoming strong. And as everybody knows, we've been singing the song about Dallas for about the last 9 years. And Dallas was not necessarily weak, but it was very undervalued and it's become very strong, right? So I still love Dallas and it's still an awesome market. And if you're in Dallas, I would say keep holding on. And if you still want to acquire in Dallas, right? There might be, a diamond in the rough or a needle in the haystack deal, but the numbers aren't as compelling as they used to be, right? Prices have gone up faster than rents. It used to be that you could buy a $100,000 property and rent it for $1,100 a month, which is a great ratio, greater than 1%. And now that $100,000 property is now $130,000, but it's only renting for $1,200 a month. So the rent went up, the value went up, but the value went up faster than the rent. So those ratios have shifted. Some of the people listening to this might be in a high-cost market like San Francisco and think, oh my gosh, really? I can still get a $130,000 house that rents for $1,200? Sign me up. Let's do it. Dallas sounds great. And other people might be spoiled and thinking, yeah, I've been riding the Dallas market for a while and I'm used to getting that 1% or greater ratio. And that's why we're looking at Houston, right? For a while, I've not been as much of a fan of Houston for various factors, but you got to go where the math tells you to go. Right? Live where you want to live, and this is my backyard, and so I like living here, but I like investing where the math makes sense, and so I am starting to fall in love with the ratios I can find in Houston, right? You can still get a $120,000 property that rents for $1,300 a month, and those ratios are working. Leah, tell me a little bit about Dallas and Houston and rents and property values and kind of just underscore or contradict, some of the things that I just shared with my listeners who are really used to me talking a lot about Dallas.
Absolutely. So the thing about Dallas, let's start with Dallas. Dallas has seen an an enormous amount of employers moving here. And along with that have been a lot of people that are very cash heavy, especially those that sold out of California to come here with some of these larger expansions.
Yeah.
And the problem that that's brought to Dallas is, number one, we have fewer houses than we have buyers. And number two, we have buyers that are willing to pay significant amounts over asking in all cash to drive up the market. About a year ago, we hit 30% over the highs in 2006. Now think about that for a moment, 30% over the high before the crash. Now, yes, we were undervalued, absolutely. But I am selling out so many clients on 1031 exchanges, and they are literally doubling their money on what they paid going into Dallas. Some of them have pocketed $20,000 to $30,000 appreciation a year. And the reason that's happening is we have so many buyers coming in that they're paying over appraisal. And now so many have paid over appraisal, now the appraisals have gone up. Mm-hmm. On top of that, taxes have gone up, incomes have gone up, and so it's very competitive. There was an article that came out in our paper a few weeks ago that talked about how the age of entry-level housing and affordable housing is gone in Dallas. Now, that's not completely true. You have to go further out. But the other thing that's been unique to Dallas is the majority of the employers are now in the suburb. About half are in the suburbs, in the northern suburbs specifically. And that's a staggering figure. When you've got a metroplex as large as Dallas and the bulk of the employers are no longer in the city, it makes it very, very hard to have values become stable in these suburbs and remain low. And so we're seeing competition is huge here. Cash buyers are huge here. And as you've mentioned, the rents are less than 1% now. And our goal right now, when we're trying to help people buy property and they're sending us numbers to review, it's try to hit 0.9, try to hit 0.95. It's very difficult, especially when you're buying a pre-owned home. Yeah. And I always look at cash-on-cash returns. If you're having to buy a home and put a lot of money into it and you're overvalued already or over where we think value should be, although, yes, you're going to have cash flow, the actual cash-on-cash return is actually quite low. It makes a lot more sense to look at a place like Houston, where you can spend less, you can buy something already renovated, and get in with less cash. So, yes, your cash flow might be slightly less or the same, but your actual percentage of income, the percentage that you're earning, is going to be significantly higher. So, Houston's a great area. Let me talk about some of the differences in Houston. Number one, Houston is not quite as diverse as Dallas. There's a lot more employment sectors here in Dallas. Houston's still very gas, oil heavy. We all know that. But it's actually heavy in a good way because we are seeing all the benefits of these changes that have happened right now. Whether you love or like or hate Trump, it really doesn't matter. No one can deny the fact that since he's been elected, that Texas is booming. And the great thing about Houston is the booming is spread. It's not so highly concentrated like Dallas is. So there's still opportunities to not only buy in the city, but also in the suburbs. And the beauty of having the suburbs not be so overdeveloped and so overvalued is that there's so many places to buy. There's enough inventory for investors to be able to make a portfolio. So one of the things that we're doing is we're expanding into all of Houston. So not just the core of Houston, but all of the suburbs, even down to Galveston, which Galveston's still very affordable. I'm buying my own property on Ocean for $215,000. Wow. I mean, it's absurd how cheap it still is down there. Yeah. It will change. It's going to change quickly, I believe. And we're seeing the signs of that in Dallas and how quick it's gone up just in the last 12 months. And Houston is next. There's employers relocating to Houston. The cost of living is still low. A lot of these employers that were in California and New York realize that they can move people to Dallas. They can pay them less, and the cost of living is about a third. So someone can make a third as much money and live the same. But instead, they're making almost the same they were making there, and they're much better, happier employers. So it's a very, very different type of market than where many people are used to investing in. I would compare Houston to what Dallas was 4 to 5 years ago. And as anyone who has worked with me or worked in Dallas knows, if you got in 4 or 5 years ago, you are sitting very pretty right now.
Mm-hmm. That's an excellent soundbite to echo that Houston is where Dallas was 4 or 5 years ago. And if you just look at the trend of what's happened in Dallas the last 4 or 5 years, that's the whole idea, right? If I would rather, apples to apples, I'd rather own a home in Dallas than Houston. But if I would, right? But you want to know, I'd rather buy a 6.5 cap than a 5.5 cap. Right? And I can go still get those 6.5 cap properties in Houston all day long. And in Dallas, if you find a 5.5 cap property, you know, one of the things that we're chasing as a hassle-free cash flow investor is the spread between interest rate and cap rate. So if you could borrow money at 5 and go invest it at 5.5, well, that's a little bit of arbitrage, right? That's a little bit of a lift. But if you could go borrow that money at 5 and go invest in Houston at 6.5, and you make significantly higher. I mean, the difference in cash on cash return is not just 1%. It's 1% magnified by the leverage, right? So it's significantly better return. And ultimately, I'm not going to live in the property myself, right? So I want to chase where the numbers are going. And I really do believe you look at where the puck is going, not where it's been, right? And Dallas has had a great run, and it's still a reasonable market to hold into. And if you can find a great deal in Dallas, go for it. But I do think Houston is the undervalued market. It's the market that is got room to grow in, and that's why we're really presenting opportunities now very strongly in the Houston market.
Any home you can buy for $120,000 or $130,000 is undervalued. And I remember people used to come here and look at what we had in Dallas and say, "Oh my goodness, I should move here. This is incredible." And now people look at those same homes and they're $220,000, $250,000. And what we're seeing in Houston is the same trends and the same discussions we were having here, as I mentioned, 4 or 5 years ago. And so I really feel like it's important as an investor to, as you mentioned, isolate yourself from where you live and where you want to live versus where you want to invest. I tell people this all the time. They want to come in, they want to over upgrade homes, they want to worry about whether or not a home has a backyard or a good school district, all these things. But what I remind people is when you're looking at the comps and you're looking at what is comparable to what you have, it does not matter if your home's in the best school district. Are the homes around you what we're comparing to? Are they in the same school district? Mm-hmm. If your home does not have a garage, do all the homes around you have a garage? It's those types of questions, and I find investors sometimes get a little more attached than perhaps they should to their investment properties and to the cities they're investing in. And so, yes, I love Dallas. I have been very successful in Dallas. I myself have my portfolio here. Am I going to be adding to my portfolio now in Houston? Absolutely. It is time. It is showing all the signs that we want to see. And one of the things we want to look for is if the market starts to fall, and many of us do think that's coming. Now, Texas is probably going to be the last to be affected. Dallas certainly, and I think Houston as well are going to be last. The only way to continue to invest in this volatile type of time right now is to find an area that is very, very stable and is very undervalued. That's what everyone was doing in 12 when the market was bad in Dallas, and that's what we're all going to be doing now in Houston.
Yeah, that's awesome. So, Leah, when a client finds a property through a turnkey provider such as myself, and they get it under contract, which is my recommendation, is before you spend a whole bunch of time investing in property, get it in contract with a free look, right? So they say, "Hey, Leah, I've got a free look period on this property in Houston. What do you think? Do you want to have this property in your portfolio?" How would you counsel a client at that moment?
So one of the first things that we're going to do is we're going to look up the history of that property, and we're going to look at, has it been a rental property in the past, and what is the comparable numbers on this property right now. So we're going to look and see what can it rent for. And the turnkey providers, such as yourself, they're often going to give you figures and numbers and things, and usually they're spot on. But it's very important you have a non-involved third party look at those things, whether you're using me or whether you're using someone else. You always want to have whoever's going to be responsible for this home for you. Yeah. Look at the home, look at the numbers, and make sure that what you're being promised is true. Yeah. And we always do this for our clients. I had a client reach out to me last night who's buying a 26-unit apartment complex. Didn't even want to go on contract until he had my opinion on it. And no, we're not representing them. No, we're not involved until he owns it. But it's so important because we're the ones who are going to be having to make it profitable. We are going to be the ones making it successful here on the ground. And we are more than happy to counsel anyone who's looking at these things to make sure the numbers are where you want them to be. I've had turnkey providers quote a number and we've run it and it's worth $100 more a month than what's being quoted, especially in a market like this. So it's very important because it's going to help you determine which deals are the ones you want to move forward with and which are the ones you want to stray from. The other piece of it is we know these areas, we know how long the days on market are, and having a month vacancy or a 2-month vacancy can make 2 years of profit disappear overnight. Yeah. It's one of the reasons we do that 2-month renting period. So one of the things we want to look for is how hard is this home going to be to rent? Not just what is it going to rent for, but how long is it going to take to get that? And so these are all the things that we'll be looking at when we assess each property individually.
Awesome. Awesome. Leah, do you have any final thoughts for newer investors who really want to add single-family homes to their portfolio at this time in the market, which is really, it's a seller's market, right? So it's really tricky to be successful in residential property management in a seller's market. Anyone can make money in a buyer's market, but now in a seller's market, how do you coach clients to be profitable?
The biggest thing that I tell people is make sure you have a team. So many people try to go at it alone, and they try to go and find their own properties online. And here's what I'll tell you. By the time you found it online, so have 1,000 other people. By the time you offer on that home, so have 10 other people. It is a very dangerous situation to get in over the value you should pay. And it is very important, whether you're working with David or other people, make sure you have a team on your side that is sending properties either exclusively to you or they have exclusivity to these properties, to make sure that you're not wasting your time looking at one thing that's not going to be available by the time you get to it. Having a contact like David is extremely important. And we love working with turnkey providers because it's just a very easy process. And that's what we all want. We want easy, hassle-free, stress-free. The other thing that I would tell people is make sure that you are properly budgeting everything that you're doing. Make sure you're looking at what your costs are going to be. Look at the tax rates. Look at the rent amounts. And make sure you're comparing apples to apples. I can't tell you how many people buy here in Dallas or there in Houston and then buy in other metroplexes, and the numbers look so good, but they don't think about what that city holds. And they call me a year later thinking, God, I shouldn't have invested here. There is no appreciation. And the problem is if you don't have the cash flow coming from monthly and appreciation, you're in a very dangerous position because there's no way to make the amount of money you should be making if you're only making monthly cash flow. One big repair can kill that. However, if you're in an area where it's appreciating like Dallas, like Houston, like really the majority of Texas, that appreciation is your protection and it's your guaranteed profit. And so always make sure you're looking at the big picture, not just the upfront numbers. It's the same thing with one of the reasons I love working with turnkeys is, again, back to that cash on cash return. If you're buying a home that's already been renovated, you're not sinking a bunch more cash than just your down payment in, so your returns are going to be higher, and it frees up more cash to buy more homes. At the end of the day, the more homes you own, the more money you're going to make. It doesn't matter how good each deal is. So I would certainly make sure you've got a team on your side and make sure you are looking at the big picture, because in real estate, you have to look at the big picture, not just the now. The other thing I want to mention is we really haven't discussed fee structure. So when you're looking at these deals and investments, I want to make sure you know what my fee structure is. Our management rate is 7%. And that is, as I mentioned, the all-inclusive rate that includes the handling of repairs, all these things. The other thing I want to make sure you know is our system is up to date 24/7. You have online access to an online account. It's a transparent system. You have access into the same reports and system that we have access to and we use. Many property managers have two different systems, one for rent collection or one for repairs, and then one for the management system. They have to enter it into reports, generate monthly statements, wait till the end of the month to calculate statements and send money. We don't do any of that. Yeah. It's all inclusive, same system for you and me. We pay out rent at the beginning of the month, so you're getting that cash flow just as soon as possible. Another thing, whether you're buying in Dallas or other places, you want to be asking these questions. What systems do you use? How long have you been in business? Are you licensed? Are you insured? And these types of questions, do you own yourself? All things you should be asking a property manager in any market, because someone who knows their market and someone who knows their systems is someone who's going to be successful for you.
That's awesome. I really want to underscore your comment about team being one of the most important parts of your success as an investor, right? Because the inventory provider, the person bringing you the deal, that's a really important part of the deal. But after you close, then what? Where is that person? How do they function on your team, right? Having that inventory provider integrated with a property management team, integrated with financing, integrated with just a macro investing strategy and ideas on reinvesting and asset protection and tax strategy, like all of those working together are a huge important part of being a successful investor.
Absolutely.
Awesome. Thank you everyone for your time today on our webinar. If you do have questions, you can definitely reach out to me, David at hasslefreecashflowinvesting.com. And if you've got questions specifically for Leah's team, you can contact Leah. Leah, what's the best way for someone to get a hold of you?
Absolutely. So my email address is lslaughter, and that's slaughter, SLAUGHTER, at Omni, OMNI, key, like a key to a door, Texas.com. Or you can feel free to give me a call at 972-480-8280, extension 20.
Awesome. And so for people who are looking at acquiring properties, I really encourage you, I can't underscore this enough, get control of an asset with a free look so that you know that the time that you're investing in conversations with Leah and conversations with anything related to that property has the possibility of being fruitful, right? If you do all of your due diligence on an asset that's not available, what a giant waste of time, right? Go get control of the asset, then do your due diligence, and then close on the asset. Don't buy something before you're ready, but don't become ready on an asset that you never had a chance of owning in the first place. Thank you everyone for your time today, and I look forward to being a successful part of your team. Thank you, Leah.
Thank you.